We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns.
Hello and welcome back to the Market Mindset. Today we're going to look at how the largest banking failure in the United States since 2008 may lead to a push for central bank digital currencies in economies around the world. We've already highlighted how regulators took possession of First Republic Bank last Monday, and JPMorgan Chase will acquire the majority of the bank's assets and remaining deposits worth around $92 billion. First Republic Bank stock fell nearly 50% after reporting a significant drop in deposits in the first quarter of 2023. Bank stock value continued to tank 97% due to fears of a bank run or failure, and the executives were silent on the health of the bank because they know that they were doomed. This is a worrying sign, indicating that small and mid-sized banks are struggling with liquidity and larger banks are gaining more power and influence by picking up the scraps.
JPMorgan Chase coming to save the day is not a good sign. The CEO, Jamie Dimon, is nothing like the man who founded his company and actually saved the U.S. from a banking disaster. Jamie Dimon is a World Economic Forum member who fully supports the Great Reset. He wants the U.S. to invoke eminent domain to seize private property. These are his words, not mine. Dimon noted in his letter to shareholders that governments, businesses, and non-governmental organizations may need to invoke eminent domain in order to get adequate investments fast enough for grid, solar, wind, and pipeline initiatives. Like his peer and fellow World Economic Forum editor and member, Larry Fink of BlackRock, who has publicly stated that control enables him to force behaviors. And it seems as though his goal to force you to comply to this woke agenda, whether you agree with it or not. Dimon adheres to Agenda 2030 and believes that our freedoms need to be removed under the excuse of climate change. The need to provide energy affordably and reliably for today, as well as make the necessary investments to decarbonize for tomorrow, underscores the inextricable links between economic growth, energy security, and climate change. We need to do more, and we need to do so immediately, Dimon added in his letter.
Central bank digital currencies are not just of interest to JPMorgan Chase, but to central banks around the world. Roughly 90% of the world's central banks are pushing for CBDC projects, with some still in the exploratory phase, while others are already in development or pilot phases. Nigeria and the Bahamas are among those who are already using central bank digital currency solutions and looking to expand further. So why are central banks so interested in CBDCs? Four main trends have likely spurred their interest. Firstly, there's a rapid decline in cash usage that is threatening to marginalize the central bank's role in the monetary system. Secondly, there's been a growing interest in privately issued digital assets and is signaling potential competition with central banks and their role as the sole provider of monetary value in sovereign economies. Thirdly, some central banks perceive erosion in their role as payment innovators and see CBDCs as a way to improve on legacy cash use cases. Lastly, many central banks are looking to establish greater local governance over increasingly global payment systems. Although most central bank digital currency initiatives are still in their nascent stages, commercial bank lenders should engage with central banks and learn more about these digital initiatives to help them shape the future. It's important to understand the risks, opportunities, and potential paths forward for all stakeholders involved in the implementation of central bank digital currencies. As CBDCs become more prevalent, they could have a significant impact on the future of the monetary system and financial services.
All of these issues can be used as an excuse to implement CBDCs as the safe alternative to traditional banking. It would be easier to implement if there were only a handful of banks working with the government. Currently, the top 15 banks make up almost 3/4 or 74.02% of the deposits for all banks in the US. This would make it much easier to do a reset amongst a small group of motivated bankers. The plans for the Great Reset are out in the open, and the WEF has infiltrated nearly every government cabinet in the world and bought out the bankers. The day will come when the government gives us deadlines to turn our paper currency to be converted into CBDCs, providing them with complete financial domination over the people. This is a concerning prospect, and we must remain vigilant and aware of what is happening in the financial sector. Thank you for watching, and don't forget to like and subscribe to our channel for more informative content.